There we go. Now we got it. I'd be really mad if I didn't do that one along with a bunch of other people. So let's look at our agenda real quick. I think what I have to do is I've got to share my screen first. And let's do this and that. So can you see agenda?
Yes.
Okay, so most of you have been with us, but for any new people, I give you a great big hearty welcome to our Anchorage IBD Meetup. We have 701 or 702 members now. And with us tonight, I can't see the counter right now. We're probably up to about 30 people so far. We'll record the session, and I usually have the link to the recording by Friday night or Saturday morning. Glad everyone's with us here. And for those watching the recording, let's look at our disclaimer. I think everyone knows we're doing educational purposes only. I'm a volunteer for IBD, and I'm a professional engineer. I'm not licensed to give anybody any investment advice. Everything has risk. Leverage ETFs are trading options. Might have more risk. There's always the possibility of a loss. Hopefully, the losses are small and the gains are bigger, but everyone should take personal responsibility. So I think that's enough said on that. But briefly, the agenda shows what we're going to be covering tonight, and we're going to do a couple of polls. I always find those to be interesting. So why don't we do the poll now? And that is, we're going to launch. Where are you right now? If you wouldn't mind filling that out for us, we'll give a couple of minutes and then I'll share the results. Right now, the people from the East Coast are winning the race. Always it's 9 o'clock back there. And we've got one in Canada and we have one from somewhere else. The person from somewhere else, if you wouldn't mind either sending us a text or unmuting yourself and let us know where you're from. Nothing in the chat so far. So we've got 95% participation. That's pretty cool. I'm going to end the poll and share the results. Besides myself, we got one person up here, 7 Pacific, 1 Mountain, 2 Central, 9 Eastern, 1 Canada, and 1 somewhere else. Thank you for responding to that. Hopefully we provide some real high value to you here tonight. We're going to stop sharing and we got another poll to do now. What is your current market exposure in terms of how much invested and how much cash?
It disappeared.
Oh, it did?
Yep.
Oh, let's go back and do that again. Can you see it now?
Nope. Just relaunched the poll, so hopefully you can see it now.
People are responding, so they must be able to see it now. And looks like we got more people coming in. I think we're up to 27 now. Okay, we've got 92%, 90, let's get one more to answer. This is very interesting to me.
Hey, Floyd, this is Rick.
Hey, Rick.
Good to see you.
Good. What do you got in the background? Ireland or Scotland?
I think of it as Ireland.
Good to see you. We're going to share the results here. 42% of people, 0 to 20%, and 1% on margin, 13% almost fully invested or fully. You can see the results there. It's encouraging to see how many people are either totally or almost totally in cash. Hopefully you got a fresh watch list so that when we get a follow-through day, which could be as early as tomorrow or maybe Monday, you'll have money to invest. I'll stop sharing that. So thank you for responding. We had 92% participation. Dan says gold miners are doing great. I've got Nugget, NUGT, and I think it's like $62, $63 today. And if you look at the IB, I'll show you in a minute. When we look at the big picture, you'll see that on the list of stocks on the move, there's the majority of them are related to, I'm not sure what the majority, but several of them related to gold. So let's go over to the big picture. Can you see that?
Yes.
Thank you. Dow Jones dives 1,000 points amid Trump tariff fallout. Next, Netflix, Spotify are best stocks to watch. Every month I say, if you only have 5 or 10 minutes, go to the big picture because the writers are excellent and they give a great summary of what's been going on for that particular day. The Dow Jones Industrial and other stocks sold off, which was a little disappointing. Yesterday was one of the best up days I think I've ever seen in my career. It was just incredible. And it turned on a dime. And when it turned, not only did it go up, it kept going up all the way to the close. Investors are preparing for more inflation data. Tomorrow, we're supposed to get a report, and I think it's not going to be too bad. Following Wednesday's historic rally, blue chips on the Dow, industrials tumbled 2.5%, S&P 3.5%, NASDAQ dived down about 4%, along with the Russell. Volume fell, but I think the volume on the NASDAQ might have been the highest in history. I think I heard Justin Nielsen say that this morning on IBD Live. The VIX back above 40 right here. The VIX had spiked above 60 Monday for the first time since last August. Wow. 10 of the S&P, 10 of the 11 sectors moved lower. And I'm not going to read all this, but I really suggest you do go by and read these. But when you go down, we also get to this market pulse, which shows the current recommended exposure 0 to 20%. Notice here's a mining stock, here's a mining. And notice BJ Wholesale, that really surprises me. That's a small competitor with Costco. My son lives near Virginia Beach, Virginia, and he says when he goes to Costco, every single time Costco is like wall-to-wall people. And he says every time he goes to BJ's, it's hardly anybody there. BJ's, for some reason, is near an all-time high. So I don't know if someone's getting ready to buy them out or what's going on, but it's just a point. I'm not making any recommendations here. And then here's leaders down. And for some reason, it looks like there's some medical stuff here on the way down. Not sure why that's going on. It says down a few paragraphs, instead of buying stocks right now, investors should consider new watch list with stocks that are holding up best in the current market. These could be some of the next uptrends, market leaders. If you haven't done so yet, at a minimum, spend some time and develop a list, probably a minimum of 5 and a maximum of 15 companies that you're really looking at that have been holding up. Costco would be an example of a stock that's held up pretty well. I'm not necessarily saying that's when you'd go out and buy, but just look through the various industries and come up with what you would buy. Bill O'Neill's philosophy is on the day that you get a follow-through day, you got to buy something. That's what he told us. And if you don't have a watch list, then you're probably not making a smart buy. You'll pick something for any number of reasons and not necessarily for all the right reasons. Anyway, here's look at Netflix. This is like a 1-year chart. And Netflix had a down day. Netflix moved up. That's a weekly bar. So for the week, it's up 7%. I hope there's some high value in going to this little video that accompanies the big picture. I'm going to play it at 1.25 speed. It's only going to be 12 minutes. So I hope that's okay with everyone. I'm going to turn it on, and then I'm going to stop it to see if you have sound. You got sound? Great. Is everyone okay if I play this little video that came out about 2 hours ago? Is that okay?
Sure.
We'll do it. At 1.25, it'll probably get done in about 12 minutes.
Good afternoon, everyone, and welcome to Stock Market Today for Thursday, April 10th. It's Alyssa Corum here, and we saw the major indexes giving back a big chunk of yesterday's historic gain, but we'll put things into perspective for everyone today as this rally attempt is still in the early stages, and we're trying to get a turn to the upside. Joining me now to discuss is my colleague, Ken Shreve. Ken, it's great to see you today. Fill us in on what we're going to be chatting about.
We thought this better than expected reading on consumer inflation before the open might put the market in a good mood, and the market might have rallied a little bit in pre-market, but it just didn't matter that much. But we'll talk about that. And then another gold stocks, utility stocks outperformed again today. Newmont Mining, NEM, also Ollie's Bargain Outlet, which has started to rally again in some volume. And finally, we heard from TSM earlier today. March sales very strong, but the stock just didn't react.
Yeah, a good lesson there. We'll get to those stocks, but first, let's take a closer look at the major indexes today. The Nasdaq down 4.3%, but closing well off the lows. The S&P 500 down 3.5%. The Dow off 2.5% in today's session, and the Russell 2000 down about 4.5% today. If you put this into perspective with yesterday's action, an inside day here and off the lows. We just had a massive move on Wednesday. Cautious optimism perhaps is the tone, but definitely an emphasis on caution because we haven't gotten a follow-up of that strength that we saw on Wednesday just yet.
Yeah, so fourth day of a rally attempt for the Nasdaq Composite here for a down 4.3% session. Really didn't look too bad in light of that extraordinary gain by the Nasdaq yesterday. It was the biggest point gain in the Nasdaq's history. The percentage gain of 12.2% was the biggest since early January 2001. So quite a monumental day yesterday. The bulls were hoping for some follow through today. Didn't get it. At the beginning of the show, we got a pretty good reading on consumer inflation for the month of March. Came in lighter than expected across the boards. Typically, that would be good news for the market, but we know that the focus right now is tariffs and the potential negative impact to the U.S. economy.
And what we do know by studying market history is when you get a pickup in volatility, even when you get a market turn, that doesn't mean it's necessarily just right off to the races. There still can be a bumpy ride before that volatility ultimately subsides.
Exactly. We typically follow through days between the fourth and seventh day of a rally attempt. Those have worked nicely throughout market history. There have been others that have worked fine on the 10th or 11th or 12th day or later, but typically between day 4 and day 7 is the sweet spot. Like I said, today is the fourth day of a rally attempt. We're in position where we could get a follow through day, but one point we've been making is that not all follow through days work, especially coming off a period of intense weakness like this. When you look at the landscape of stocks to buy, a lot of your gold stocks are quite extended at this point. Utilities are still outperforming. The merchandise isn't quite there yet. So that can take a little bit of time to set up. But if we get a follow through day and there's no merchandise to buy, it's okay being patient because sometimes it takes a few days, a few weeks for new leaders to come out. So patience for now. We'll look for that sign of strength, but still very challenged market here.
And speaking of looking for leaders, you and the rest of the leaderboard team have our quarterly leaderboard scorecard webinar coming up at 4:30 p.m. Eastern today for members. So if you are a leaderboard member, go to leaderboard.investors.com. The banner at the top of the page should send you right to that webinar link. Ken, I know it's going to be quite insightful. Just wanted to flag that for folks.
My colleague David Hatman, Saito Chung, and Justin Nielsen will be joining us. He's got a great spreadsheet with quarterly data that we'll take a look at, and we'll talk about what we're thinking right now about the market. We'll take a look at the watch list. This will be our quarterly update coming right up.
Coming up. Let's take a quick look at the other major indexes. Before we move on, high-level thoughts here, Ken, and then we'll get to those stocks to watch with our couple of minutes left here. So
Yeah,
here's the
S&P 500, same situation as the Nasdaq Composite. The fourth day of a rally attempt here. Nice rally off lows for the S&P 500 as well. So the rally is still intact. We're not day 4 on a rally attempt for the Dow Jones. We typically look for follow through days on the Nasdaq Composite and the S&P 500. So Russell 2000 still hurting here. Inside day for the small cap index. When you're concerned about a recession, your small caps can take the most heat, and that's what's been happening.
Let's quickly take a look at the 10-year Treasury yield as well. Give us an update here, Ken.
The bond yield was down 11 basis points early in the session after we got that soft inflation data. So thought we might get some relief in falling bond yields, but look at what happened when you look at the price performance of the 10-year yield today. Go back to the daily chart, you can see that 11 basis point decline really just faded and the bond yield didn't move. It was down 11 basis points and then it recouped all of those losses and closed basically just slightly lower from yesterday. So still seeing some selling in that bond market. The safe haven trade is not looking so safe anymore.
Yeah. And then we do want to flag one sector today, and that is XLE.
The worst performing sector among the 11 sectors tracked by S&P. And yeah, you're seeing energy stocks selling off viciously, and energy stocks and oil for that matter. There's concerns of a slowdown. You'll see a lot of the weakness here, and certainly seeing it in USO, XLE for sure.
Yeah. You did mention a bright spot, and that is the gold and gold mining stocks. To look at Newmont Mining, a couple of strong days in a row now, outperforming today for sure, up 4.5% on top of a solid move on Wednesday of 8.4%. So this area is rocking and rolling right now.
You see a pivot on the chart to 48 to 23. I think you have an alternate entry in that area there. Technically, a stock that's still in a buy zone here. What you want to keep in mind about Newmont is that even though fundamentals are pretty good, you can see really nice growth, top line growth and bottom line growth in recent quarters. Newmont is not the leader. You've had a lot of gold producers that have been breaking out to new highs, showing a lot of relative strength. Agnico, the only stock on leaderboard at this time. AGI is another strong performer. So the fact that Newmont is just now breaking out, that's a yellow flag to me. It does have a pretty decent relative strength line, but just a reminder to people when you're looking at a specific industry group, it's best to find alternate entries with the leaders in the group rather than looking for a stock that's breaking out late in the game.
Okay, let's take a look at Ollie's Bargain Outlet showing relative strength here.
Yeah, we gave this a try on the leaderboard not that long ago as it was starting to move past that 115.42 entry. And then the market just got in the way of progress here. It started to lead. It looked like a fairly orderly pullback. We eventually just cut our loss short in this name, but encouraged to see the stock find support at its 200-day moving average yesterday with some decent volume. And then it followed through today, closed up near its session high on a real down day, another down day for the market. The volume was pretty heavy today too. It's still fighting here, trying to claim that 115.42 entry. It's a volatile stock. It's easy to get shaken out, but there's a good fundamental story at Ollie's going on. They've been taking a lot of market share. Some of these dollar stores are struggling financially, and the bankruptcy of Big Lots, Ollie's bargain outlet, seems to be a beneficiary here. For a retailer, still a name to watch. Again, prone to some volatile swings, but still setting up here.
Okay. And then let's wrap things up with a quick assessment of Taiwan Semiconductor, a big name in the chip manufacturing industry. You mentioned the sales figure coming out did not provide a lift to the stock. Shares down 4.8% on the day, and this downtrend since January continuing.
Yeah, their top line growth in March was better than 40% in local currency. This company has been reporting very big revenue on a monthly basis. We're going to hear from TSM next week. They're going to be one of the first tech stocks reporting earnings along with Netflix. It'd be interesting to see what they're saying about AI demand. This is the world's largest chip foundry. It was another quarter of really strong sales, but the stock just couldn't react. It's been on a downtrend, that correction from 226 down to 150. Usually when you see heavy volume drops and the decline that we saw in TSM, there are concerns maybe that growth will be slowing going forwards. That's may be priced into the stock here. So I think there were good numbers earlier today for March revenue, but I'm interested to hear what they're going to be saying about AI demand, world's largest chip foundry that makes AI chips for a lot of major players. I wanted to mention TSM for another great monthly sales figure, but these AI stocks are really in the doghouse for now.
They really are. And what was the beginning of the end in the short term here, Ken, is that DeepSeek announcement. The stock was in a nice uptrend prior to that, but it could never regain its footing after that news came out, which really shook the entire artificial intelligence theme. So out of favor right now. You can have some great headlines, great fundamentals, but if that's not showing up in the chart, then it's not a good stock to be in at that time.
Yeah, that first gap below the 50-day moving average was the first clear sign of institutional selling. When you give up a support level like that, volume 66.7 million shares was huge, but it actually marked the start of even more institutional selling. After it plunged to the 50-day, it rallied back. There was never much volume behind the rebound, and heavy volume selling started to pick up again. Taiwan Semi is struggling like just about every other AI stock, but I still look at it as an important earnings report.
Yeah.
We listen to what they have to say.
All right. Thank you so much.
Okay, I think I'm going to stop it there. That's pretty much what we wanted to show. Let me just quickly go back to our agenda. You see the agenda?
Yes.
One thing I've been doing here lately is I use the market surge comparison tool, and this is a year-to-date analysis of some of the leveraged ETFs we've been following. On the far left here, you can see a table. Nugget, which is the miners times 2, is up 45.8%. Yen, which is a China stock times 3, is up 32%. FNGA at the close yesterday up 8% year to date. But notice SOXL, wow, we down almost 72% year to date. TNA down minus 40. TQQ down 13. And if we scroll on down, then I've got one for exactly 12 months of a comparison, and looks like the winner is negative 45%, yen 32, FAS 20%. But in the last 12 months, SOXL's done almost 71%. That's pretty amazing to see. It's hard for me to tell. These colors are hard to distinguish from each other. I think yen is this one, but then it gets balled up in here. I don't know if yen is this one that had this giant spike back in October. They don't do a color code over here for us. Basically, everything's been selling down, and yesterday, everything did this V-shaped recovery. Yesterday, I had a phone call from one of our longtime members. I won't share the name. I've had similar calls in the past. It was Tuesday morning, and the person said, "Did we ever get a sell signal on TQQQ?" And I said, "Goodness gracious, yes. Back in February." And she goes, "Oh, did the fast line cross down below the slow line?" I said, "Yes," and showed her a graph. And so I thought, I don't know why, this image popped in my mind. And this is someone I've known for 30 years. The image that popped in my mind was a hand grenade, and I'm not exactly sure why. So I went out and found an image. This is how I view leveraged ETFs. Like when you purchase an LTF, leveraged ETF, it's almost like you're hanging on to a hand grenade. And then with no warning, Mr. Market, who is this sly-looking guy, he grabs the pen and he pulls the pen. And so this is my thought, that when you get a sell signal, like after the pen is pulled, so notice I put one asterisk and say the sell rule occurs. And so I don't think, I'm sure some of you have. I went through engineer combat school in 1973 in Fort Belvoir, and we fired off every kind of a weapon you can imagine, from M16s all the way up to howitzers, and we threw live grenades. And for the U.S. style grenade, when you pull the pin, nothing happens. But when you pull the pin, that allows a lever to release. And when that lever releases, there's about 4, maybe at the most 5 seconds when this thing explodes. And if it explodes anywhere near you, you're going to die. Or if it's 20 feet away, you're going to be probably severely injured, because all of these little pieces here explode outwards at a very high velocity. So when it's one hand grenade, there's probably 100 of these pieces. So when the pin is pulled, the sell rule occurs, and you need to toss your grenade. So 2 asterisks. The equivalent of tossing the grenade is sell the darn thing fast. So your leverage ETF is the grenade. Mr. Market never announces ahead of time when he's going to pull the pin. I bought TQQ, and all of a sudden, it was time to dump it. I didn't hold it very long at all. Fortunately, I got out with a profit on it, but had I waited 10 more minutes, it would have been a loss. This is an unusual market. Typically, when you own a leveraged ETF, it's not like you have to make a decision in the next hour, but you should be prepared in case something happens. Hopefully, when you buy it, especially if you're using the weekly strategy, you own it for a couple of months. So the other image that came to my mind is when the pin is pulled, what are you thinking? That's a deer in the headlights. You don't want to be the deer in the headlights. You want to have your sell rules, your buy rules, and if you're following our strategy with the stochastics, when you get the cross in the up direction, hey, it's time to buy. You get a cross in the down direction, and then there's also some other sell rules. Like if you get a big one-day drop, or you have a trailing stop drop. And then the other image I wanted to pull up briefly is you almost never see the CNN fear greed all the way down. This low was 9 when I looked at it this morning. It says a week ago it was all the way down to 6. A year ago, this was at 49. We've seen it all the way over to extreme greed, but with the market going down and people are opening up their 401ks and are seeing low numbers, and people are worried about inflation, recession, or whatever. So it's just a time to have our senses heightened. Most stocks are, I won't say most, but very many stocks are below the 200-day. Most of the stocks are below the 50-day moving average. So it's just a time of caution, but I hope no one was offended by this image. I had a little focus group of a couple of guys, and I said, hey, what do you think? And they gave me the go sign. So maybe that'll be an image for you, that not necessarily just with the leveraged ETF. If you're trading options, those can be pretty volatile. Or if you want to buy an IPO or a high-flying stock, you may have to move fairly quickly. And so if you're using hard-earned money and you're putting it in the market, it's not time to go take a nap. It's my philosophy here. So I think that's enough said. I'm going to stop sharing. Hailey, you're up. It's time for Hailey to do his presentation for us.
Let me.
And maybe just in case we have a new people, a real quick 1-minute bio on who you are and how come you want to take over this crazy group.
Very fun group. Oh,
Yeah, I can see it.
Hey.
You want to go to slides?
it changes too many screens on me.
Right. You do it however you want to do it.
Something weird is going on. Give me a sec. I think I have to adjust my zoom so it's not dual monitor use.
Okay.
Hello? I feel like what? Not
Maybe
letting
you
me.
have to swap monitors or swap which screen is on which monitor. Just an idea.
Let me see what is going on.
So while you're doing that, Pat asked the question, and in this high volatility kind of market, if you get a buy signal what would be a reasonable position size. That's up to the individual person. When I bought TQQ, it was about 1/3 of my normal position. I definitely wasn't going to put in my full kind of position size, but you just have to do what you're comfortable with. After you buy it, if it continues higher, you buy more. If it continues down, you either hold what you have or you sell it. Does that answer the question there for you, Pat?
Yeah, I'll just make it work. Instead of trying to make it full screen, I think this is probably good enough. My name's Hailey. Floyd has been running the Anchorage IBD Meetup for a while. He's the one who created TQQQ. I heard through the IBD joint meetup in San Francisco that says, hey, we're looking for new meetup leaders. Like, oh, that'll be fun. Because I've been attending almost every single Bay Area meetup, which is like 5 meetups. I forget the number. There's about 5 different meetups that goes on in San Francisco. I've been to like every single one. And every time I talk to one of them, they enjoy being a leader of a meetup because they get to improve their own trading skills. If I had to do a presentation on bear market, I had to be sure that I know what a follow through date is. I really have to know what's my volume bar that's on the market search. Like I really double check myself to really ingrain. If I'm teaching someone, I better know it very well. I started investing about 13 years ago. So I bought stocks like I was at Morgan Stanley analyst and I bought stocks like Apple, Nvidia, which I hold to this day. So you guys can guess I have probably $3,000 gains now because Nvidia stock has gone down. I sold along the way, but the majority of it's still there. So that's my experience, and that's why I want to run the Anchorage IBD meetup. Any questions? Any things you guys want me to elaborate? So let's get to the presentation. So I think this is very apt for the current situation. I was thinking of what would be good. What happens to me when a bear market hits, when a 20% correction hits? I have a hard time buying in. I follow countless different systems, and every single system would say buy. But I've been doing this for over a decade. I know better, right? No, I don't know better. I have to go back to my original rules and follow the system. So that's why this presentation came about. It's called Buying the Fear and Strategies to Re-Enter a Bear Market, the IBD Way, and a few other IBD leaders that I have been following for, I guess, a decade now. Almost for many years now. Not a decade yet. So spot the fall today, size your risks, explore kind of entry point taxes from different investors. I have to read this. We're volunteers, both Floyd and I, and this information is presented for educational and informational purposes only and should not be interpreted as investment advice or endorsement or a recommendation to buy, sell, or hold any specific securities. I am a volunteer, not paid for this presentation. Investing carries significant risks, including the possibility of substantial losses. You conduct independent research, carefully consider your financial situation, and can seek professional guidance before making an investment decision. Neither I nor any associated individual accept liability for any investment decisions based on this information. That is as fast as I will ever talk during this presentation. So these are 4 charts I always follow. I took these screenshots Friday of last week. What does it look like on every single chart? This is the DJI because 45,000. This is the NASDAQ because we know the topping was at 20,000. We don't really know because I didn't take the picture over here, but we know this is Russell 2000. Large caps, mid caps, small caps are all in line saying, hey, there's a consolidation action that has gone downwards, and this downward has gone 20% on every single index. So every single index is screaming at me, telling me we're in a bear market, see where you can protect your capital, because with zero capital, you can't make anything. So where are we now? Bear market. In a bear market, I always like talking about emotions and feelings. We've done studies where people have gotten an injury on the brain and they have no emotional centers. With no emotional centers, they actually couldn't make a decision because every decision seems the same. So we do trade our emotions, and that's what makes trading a little bit more interesting. It's not fully AI, it's not fully robotic. Yes, I'm in Silicon Valley, but emotion still drives a lot of human decisions on how to program the AI. I believe that AI has emotion based on the creator. So let's look at some. I do believe that AIs do have emotion because the creator of the AI definitely does have emotion when initially making it, because they have to make the ethical, the logical decisions, and those are based on emotion.
What happens if the guy's a jerk?
Then the AI might turn into someone who has cut a lot of costs on our government. Some people love it, some people hate it. There's both sides to a coin. He is making an AI, XAI, asking a lot of people to invest in it. and it's done by supposedly 7 engineers. So let's look at historical context. We got it from Mark Minervini. Let's take a look at what's happened historically. I'm going to zoom in on this a little bit. So we're going to take what happened in the COVID crash. How big was this bear market? This bear market was about 31% downwards. What happened 22 days later? What happened 63 days later? What happened 126? What happened 253? So it took about almost 19 days right over here. And it took a 31% loss. We look at 2020, 2001. Generally speaking, was such a V-shaped decline of these markets. 19 days, 15, 17 days. What is this? 15, about 20 days. We've seen about like when we have 3-week declines of about 10 to 50%, we tend to expect good news later on. The moment really sucks because you're taking, if you haven't sold out on the sell signals yet and you're writing it out, especially on triple leverage SQQQ, triple leverage, not SQQ, you'll be doing great if you're SQQQ. If you're triple leverage TQQQ, then you might be hurting quite a bit. So that's why this historical presence of Mark Minervini trades, and he's a great trader. He's been multiple times investing championship, and he was recently won another investing championship. And he didn't even need to go to the most recent one because he already made his name for himself. But he decides to say, hey, I'm still relevant. I still trade and I still a good job. So I do respect that. I do respect him. He's not riding on his past wins and he's constantly proving himself. Any questions on these crisis events or the DJIA declines? Cool. So what is happening with your portfolio? So we just did so Floyd did a poll. It said, what percent are you invested? I'm curious. Is the person who's on more than 100% on margin, is it margin on gold? Because it's like, we're in a bear market right now. Most of us in 10 to 20%. Some of us, I know that George mentioned that he's in SQQQ. And he's at the bar right now taking a shot because he only made 30% instead of his 100% gains.
Thank you. I'm no longer.
Oh, congrats on your profits, George. I always tell people, it's not a win until you sell. And all gains are real money because you always have the option to sell. So you have to pay attention to what's going on with your portfolio. Is it still going down? Are you gripping your hands, gripping your shoulders so tight that you're just like, I can ride this out? What are you trying? But you always have to think, it's like, what's the few years inside the future? What are you trying to do with this money? What if you lose it all? How would you feel? Always ask, how is your portfolio doing? Because you're saying these are the leaders and these are how I want to be right or make money. Versus what is the market doing? Making sure those two are in line with what you're doing. Since this is an IBD group, we have to go back to the core. We're in a bear market. What's the first thing that we look at? We have to look at when is the follow through day. I want to give you guys a reminder. What the heck is an IBD fall day? There's a lot of rules to it, but there's 3 basic principles. It's going to be a day 4 or later. The price percent is going to be 1.2% or greater. And that follow through day's volume is greater than the previous day. Let me give you an example. We're visual people, right? Let's look at how it goes. So that first day, it's always called that rally attempt. So we're in day 1. So by day 1, we'll have to go by the earliest is by day 4. This is 1, 2, 3, 4. During COVID, this wasn't the fall through day. Why? The price is definitely there. It's because of the volume. This volume is less than the previous day. So then we have to keep going to 5, 6. Oh, is 6 there? Not yet. That volume is not there. That little blue line, not yet. Then 7, 8, 9, 10. That price definitely hits. Does that volume hit? Yes, it does. All through the day, let's go ahead and buy anything. Literally buy SPY, buy QQ, buy TQQ, buy something because we're humans again. We need to have this mental, psychological shift in our mind saying, we're not sitting on the sidelines anymore. We're participating. You can't just say your participation because actions speak louder than words. So you have to go to your investment account and just click buy 1 position of TQQQ. I do recommend 20% as IBD says, because we look at the big pictures as 10 to 20, 20 to 40 and stuff like that. Or you follow market school, you're going to buy 45%. Yes, a 45% position. Depends which rule set you follow. change the mindset, change the emotions a little bit, making sure this doesn't happen. We don't know if it's going to be a V-shaped recovery. Everyone says it's not going to be because it's like, how could it happen again? But it's exactly that time when no one believes it's going to be a V-shape. It's going to be a V-shape. I remember in COVID around my investment group, it's like, how could it be a V-shaped recovery? I'm going to buy it back when it comes back down. Looking at this chart, when did it come back down? Not for a while. I don't think it's ever come back down to the COVID lows either. So we might be waiting for nothing. So why does this follow through day matter? Because a follow through day is not very sensitive. It actually captures a lot of false positive. But the benefit of these false positive for a follow through day is that it's preceded every major bull run. And this major bull run says is permission to buy again. It means that if you buy on this follow through day, you're not going to miss the rally. You're not going to miss a buying opportunity. But you buy it earlier, like what happened yesterday, or because you bought on day 3 instead of day 4, it could have hurt. Let's see what that looks like. Where is the rally day here? This is the NASDAQ, 20,000, 18,000, 20,000, 19,000. This is actually falling like a price contraction pattern, and it broke down to the downside, sadly. It could have broken up to upside, but who knows? So where is the rally day here? It's this blue day that's right over here. So that's day 1. And then day 2 and day 3. We're like, la-di-da. I'm in Pacific time, right? 6 a.m. Okay, this is cool. 7, 8, 9, 10, 11. Wait, what just happened? Half an hour. Does that mean I should buy or should I wait and see what happens? You guys bought right at that spike. Oof, it didn't well. But if you wait at weekly charts or daily charts and you buy at the end of the day, depends on your rules, right? If you buy at the end of the day, you'll be up here. And by the end of the day, you'll be like, wait a second. This wasn't a follow through day. This was day 3. And the earliest it could be a follow through days is actually today, on Thursday. And it would have been a 5% loss, especially if you did a 100% buy. If you guys remember, IBD used to suggest 0 or 1s, meaning have 0% or have 100% and just be careful. And that's that. You will have lost 5% of your portfolio. So always be careful and see where your rules have taken you. If you've traded for a while now, that's beautiful because you can now backtest your own data to see, hey, where did I buy? Where did I sell? Charts will tell the emotions of how you felt. If you go back to this calendar state, was there something happen in the family, among your friends, within yourself? Maybe. And charts and your buys and sells will tell the state of your mind. So I would like to leave the follow through date with a follow through date reminder with just a quote from Bill O'Neill. It's, you must learn to follow the rules before you can break them. You have to know why you're breaking that follow through day. So if you did buy on this day, it's a very good time to get out that piece of paper, to get out the diary, to type in your computer, however you do it, to just journal and say, why did I buy this day? What is going on? Am I having debts I need to service because I'm buying too much commercial real estate? Or is there something going on with the family? I think a nice little gift to someone is going to make them smile, and their smile make me smile. Pat did say, Webby on IBD Live says 1%. I do agree with him. I did 1.2% just because it's like, there's some IDB rule sets that say 0.8%, 1%, and 1.2%. That depends on the previous volatility of the market. The previous volatility can be like a 60-day look back period of how volatile the market was. And that's how much of our price gain it should typically be. I've had it a few times where it's right at 1%. Then I have to think, how volatile has this market been? It wasn't a huge bear market back then. I guess this is a fall through day. I had to argue about 1% or 1.2% if this is a fall through day or not. That's when it's like, wow, we're getting real technical here. So we're just going to go up above and beyond. What have other people been doing to build on top of Bill? So Steve Sweats, he created something called the Woo. Give me a wrong moment and I'm going to go to my browser. So what is the Woo? The Woo is pretty much Steve Sweats. This guy's also a meetup leader. I think he is anyway. He's been speaking at so many that I just assumed he's a meetup leader. I've never been to any of his meetups because I don't fly over to the Midwest very often.
No, he's not a meetup.
Okay. Yeah.
He said in the part of the world that he lives in, is he on the, I think he said in Mississippi, there's not a single meetup group.
Actually,
Yeah.
I do remember Steve saying that to me.
We spoke to our Anchorage IBD Meetup group about 14 months ago.
It's a good amount of time. If you're following Wu, when did he say to sell? He says there's a correction. Signal sells right over here. The NASDAQ market, it says back in February, it was a correction and should have sold. So that's the same in February. What other sell signals did we get? We also got the leverage edge, which is Gary Taylor's saying we should definitely sell all QQQ. And Steve Sweats uses this mainly as a stock buyer opportunity, and Gary Taylor uses this as mainly as a TQQ buying or selling opportunity. And these links, you guys, you just have to request access for Steve Sweats, and he'll let you in. Michael Nesler, he's a very smart guy. He used to work at Google. He programs a lot. He's now a full-time trader. He created this thing called the NTT, the NASDAQ Trend Trader. What he said was, I want some way not to do leverage QQQs, leverage ETFs. I don't want to do leverage ETFs. I want some way to make sure there's a downside, but I still want the leverageability of the TQQs. So he says, I want to buy futures. He presented this at his joint IBD meetup, and pretty much says how I trade the NASDAQ. He does a lot of reviews. So this is the question I asked him. What if I could just trade the NASDAQ directly using a mechanically soundly backtested system? And the system will avoid bear markets. Full disclosure, he hasn't been outperforming the market, but typically there's a regression to the mean. So his underperformance typically means an overperformance this year, and we'll see what happens. And the goal of his is he gets signals from the NASDAQ composite. He uses the entire account. He doesn't make any decisions. Very minimal drawdown. Asset protection is what he's trying to do right now, and to get a really high return. But I'm not trying to teach every single system right now, but these are his general goals. Where's that last slide of his? He has a lot of slides. So NASDAQ composite is not tradable directly. We need a map, signals, index to a tradable instrument. Could use a leverage ETF using derivatives. And he says you could get a 91% drawdown. This is a very Spark Note summary. So he says no TQQs because you can just get a 90% drawdown, and it says pretty much use futures. E-mini NASDAQ 100 futures, $20 per point move, super liquid and very low commissions. So he uses pretty much futures to make sure that he will avoid as little drawdown as possible. Very smart guy. So I showed you the core IBD style, and you are familiar with leverage edge. Now you know Steve Sweats. Okay, I just checked chat's doing well. So I showed you different ways of making sure you don't miss the buy signal, which I've missed in COVID because I went from every single market model says buy. And these guys have been trading way longer than I have. And I pretty much ignored it. And I would highly recommend not to ignore it because we're in a bear market. And just like before, there's a regression to the mean. Bear markets don't last forever. And the US market has a tendency to go upwards on the longer horizon. The longer horizon sometimes might be 15 to 20 years because look at what happened from 2000 to 2010. But on the long, big picture of things, when you put the chart on the floor and you stand up on your desk and look down, the market tends to go up. So you always have to match your strategy to your personality and conviction. Are you patient? Are you anxious? Do you want to do daily trades? Can you sleep at night? Can you hold stocks with 10, 20% drawdowns? How much of your net worth are you trading with? Are you trading with 1%, 2%, 5%? Because some people who are trading insane moves are only trading with 1% of their net worth. So for them, if they lose it all, that's their personality and their conviction. It's almost attributable to just is very speculative. And again, there's also time commitments. Are you trying to trade ETFs? Are you trying to trade high flying stocks? Are you trying to get into, not the loud honk, are you trying to get into NVIDIA in the beginning of 2024? Or are you just trying to say, hey, it's already propping up the indexes enough and that's as much as I want? Am I aiming for 10% gains every year? 20%, 40, 50, 60? What percentage gains are you guys trying to get? And most important of all, please have your watch list ready. Spend 10, 20 minutes just going through the list in a bear market. In a bull market, we've seen those lists like the Market Surge growth to 250. And that sometimes is just ungodly long, 300 stocks. I'm like, Okay, here we go. We're gonna have to find gold, the biggest nugget of gold in the gold stack. So keep your watch list ready. So here's some screens I like to use to find my next big winner. And of course, I'm going to show you market surge and how I use these screens. So 3 ways: volume, patterns, and RS ratings. And I'm going to switch over market surge on full screen. So volume, I call it volume explosion, but it's pretty much high volume. If you look at exactly how I do it, I look for 400% change. I can always change this into 100% and see what I get. So I get 10 stocks. I'll just leave that for now. I say you start out with 10. What do we have? And we'll always look at weekly charts first, right? And hello, news. There we go. I'm not looking at every single news. No news. Probably just no news on that. So on a smaller screen, it's hard to see everything. How's sales? How's earnings? How's annual? Is this buyable? We all know this is a no. It just might be a downtrend rally. Can we do this one? No, there's no percent gain. Can we do this one? Maybe. How's breakout? Breakout wasn't that great. Let's break out a little bit more. There must be a daily huge volume. So I was like, is this possible? Could this be a breakout? Let's see how it broke out on the first day. 85%. That was a good breakout. Had a round trip and it's breaking out. And it's gold. Interesting. And we know gold is number 1 in the industries. So does it have more room to grow? It's been growing for a very long time. The near pivot tells you if there's a cup and handle, double bottom base, consolidation base, or a flat base. It tells you things that are nearby. And it tells you everything without the sales. So always make sure that what has sales and it's growing. And it's near breaking out. So it's a little hard for me to tell what's going on. This looks like it's not viable because it undercut the previous high. When I look at monthly, has it been flat for a while? For about 2 years now? Has it been making money? Not really. How about on the yearly? It's okay. It's not a high flyer unless they're doing something interesting with their insurance. And if I take out my average sales, I'll probably have 7. Oh, I'm going to do something else. I don't want to mess up too many of my screens. I can always go to, where is it? Tracked? No, it's reports. Market surge growth 250. I can go to pattern recognition and I can always go near pivot. These have all the 7 patterns. Just a tip if you guys are using market surge. When you're making a new screen, you can always change where is it screening from. So I can screen from my own personal list. I can go to my favorite into the reports list. And I can go to near pivot, recent breakouts, or breaking out today. These are always great lists to get it from. See which ones got taken out, IPOs, and stuff like that. So those are just great lists to have. My test screen has 10,000 submissions. So we can take a look at near pivot. Looks like an M&A. This has not been doing anything. There's no uptrend. There's no 20, 30%. And we just keep looking through this. Like, you can imagine this bear market. I'm ready through 2 of my screens. RS line. This has the most screens out of 13. If you look at my RS line, I like my sales. I like my volume. Because at one point in time, stocks were having a lot of sales, but not a lot of earnings. So I adjusted. So I want to take a look at every single stock with the earnings. Most of the time, stocks are not perfect for our rules. And we always have to adjust a little bit. What is this? Gold again? Gold mining. Yep. Sales, earnings. Wow. Oh my gosh. It's making so much money. So that's how I go through it. It's gold. I am gold. That's a funny name. I almost don't ever pay attention to gold. But that's overall how you kind of screen and make sure you make your watch list. Making sure when there's a fall through day, buy indexes. And then maybe after you buy indexes, you can do the screen. But make sure you're not too late to the game. The timing matters when playing the stock market. That's my presentation. If you have any questions, happy to answer. If you want me to take a look at more stocks, happy to answer.
If you want to unmute yourself or if you want to do the chat function, be sure to ask questions here.
Yep, I see Dash Hood. I see some questions about DoorDash. Let's see what's going on with you guys. As always, I tend to look at a J. So I start with earnings. What the heck? 661%? Wow. I haven't seen that in a while. So DoorDash looks like it's finally made money last year, which is a great sign. Sales are going up, earnings are going up. It looks like there might have been acquisition last year. So I'm going to check the news to see if there's any acquisition news. Nope. Yeah, but there might be acquisition. Does anyone know? Let's take a look. Double bottom base. This is the previous gain. We have the low of about $100 and the high is about 200. So that's 100% gain. You have a double bottom base. It looks pretty darn good. I want to see probably another week of consolidation a little bit, but this RS line is at 95. It's doing absolutely beautiful. It's a little bit below the 50-day moving average. Volume was drying up inside this base. Volume was a little high on the second side of the base. This is a very good stock. I'm going to add it to my buy ready list. Anyone else have comments about Dash before we move on? Thank you, Uma-san, for the positive affirmation of a great presentation. Appreciate you. Robinhood. Oh, what are you trying to do? There is a rule that some meetup leaders follow. It's that they do relative basing. In how to make money in stock market, it states that you want a 30% gain. But what happens if you have something like this? You went from $14 to $65. I'm calculating how much percent gain. That is like a 400% gain. That is 10x more than what's happening. So let's say we extend that 10x times more. So that means if a typical cup base is, let's say, 20%, we can go to 200%. So if it's a 200%, we can say this is still forming the left side of a cup. I just finished talking to another hedge fund manager yesterday. He told me he likes finding companies and he likes to know every single little thing about it, because we're not just trading on technicals, we're trading on the belief that this management of the company is doing well. Is Robinhood kind of scaling back on their employees? Are they scaling back on R&D? Are they scaling back on acquisition? If they are, maybe it won't be the best company. But if they're pouring even more money out, let's see ROE or cash flow. They're making money, not too much debt. Management owns 7%. It's tip-top owners. All Springs Growth has decreased their position. Artisan, they both have a sizable position. Looks like Allspring reduced position size just to take some profits because they've made some money over time. So this one might be viable if you know the company in and out. They're probably not just a commission-free trading platform anymore. Maybe they're a cryptocurrency trading platform. Maybe they're really trying to reduce currency gas fees, because I do the crypto markets too. And the commissions for those trades are a lot less. It's not 1%, and they're trying to reduce it. And maybe all the meme coins and people who like these meme stuff are going towards Robinhood and they're trading on Robinhood. So this might be viable depending on your rule set.
I think I heard earlier this week on CNBC that Robinhood was considering going to a subscription model. I didn't fully understand it. I don't know if it's like buying a membership in Costco or what it was, but there was some kind of innovative thing they were looking at doing, I guess, that would be a new type of business for them. So I think they're always looking for new ways to do things. And so there is potential. Oh, Amazon Prime. Maybe that's what they were comparing themselves to. Subscribers are up and they pay $5 a month.
There's bundle services.
Wealth management or whatever. It just seems like Kawasaki, I can't remember the guy's name that runs it. It seems like he and his team are looking for ways to make more money. And full disclosure, I'm not a member of Robinhood. I don't have an account there. I don't own the stock. I'm just sharing things I've heard recently. Oh, there's her name.
Yep.
Tanaber. Yeah.
Yep.
So he seems like he's got a vision there, but I also heard that as people get older, they have a tendency to leave Robinhood and maybe go to a more traditional brokerage. He's trying to stop that out migration too, I think.
I believe that. Because it's Robinhood, it's like for the young bloods, even people my age. It's like most of the people, I've tried Robinhood Gold. It's just not that great compared to other brokers, but I don't think it's just that platform anymore. Satish said, Hood is the preferred broker for millennials and Gen Z. As their customers become more affluent, they're planning to provide more services. Their goal is to become the next Schwab. Yeah, Robinhood doesn't offer the best products and services, but everyone knows what Hood is. People my age use Schwab because they wanted to use their debit cards for 0% foreign transaction fee when they withdraw from ATM.
Access to Thinkorswim too.
Now, people I think I'm the only one in my age group that actually uses Thinkorswim, where I have 20 charts up on Thinkorswim and looking at like bonds and forex and everything. Like I'm actually switching over to TradingView too, because it's just of the people are switching the scripts they're writing for Thinkorswim is starting to get over to TradingView, and it's good enough. And I can have so many charts on TradingView also.
Yeah.
And there was another one, TGTX. I love my weekly charts.
And what do they do? Novel treatments for E-cell diseases.
I have no clue what this is, so I don't know what the company does, but let's see if they got to some kind of FDA approval recently. From the chart, it doesn't look like this was the FDA approval, but otherwise, there's nothing been passed.
But it hasn't had a sell-off, though.
Alex Z says that it's already selling. That is true, but we look at the RS rating, it's a 98. It is selling, but it's doing better than the market still. So that's why this is a pretty interesting company to look at. September had a bad year. Last year was before. That's interesting. I always look at the total number and also the relative number, relative percent gain. Last September was crazy, 165. They haven't beaten that quarter's sales. So let's look at the stock around that time. They launched MS in the US. That's why there was a huge spike and huge sales.
Just wonder why it didn't stay up then, if it's a good thing. Why did the sales only peak for one quarter? Does it cure people and they don't need it anymore? I just wonder why it went up to 165 and the next quarter sales were 44.
I just attribute to initial demand. There's initial demand for the drug and everybody wanted it. And now people are starting to get it out to everybody. Overall sales number is still greater than the ones before.
Do you use the comparison window?
Rarely.
But just click on that little window shade thing. Now put in WGS. Look how much better WGS has done.
What did WGS do?
When you brought up the TGTX on the weekly chart, they show other companies in the similar industry. So pull up a chart for WGS and let's see. Wow, they went from 10 to 100 in a pretty short period of time.
If we go to September 23, it went $5 to 92.
But look at the earnings per share. They were losing money. They finally started making money in September of 24. And the sales are pretty small. It's a fairly small company, but the stock went from 5 to 100 or whatever it went to in a pretty short period of time. Provides Centralia's health intelligent platform to deliver personalized insights. I have no idea what that means.
That looks like gene testing. That's what they're doing.
Oh,
Yeah. Gene testing. There you go.
okay.
Hey, does my kid have predisposition to whatever disease?
Well,
Thank you.
so it might be too late. That one's already taken off like a rocket.
Let's see.
But sometimes, like I looked on the weekly chart where I found WGS a couple of minutes ago, sometimes I find stocks. Because if you look right there in the middle to the left, and you look at the relative strength, all of those have a 99, and the earnings per share, not so good, but you have DRUG is way up there and ETON compared to the others. So you might, there you go. So, wow, look at that spike in December.
That's it. That looks like a FDA approval right there.
Goodness gracious.
Oh, these biotech, like Bill O'Neill did make money.
From 3 to 50 in 1 week. Now it's 27.
Yeah, but look at the liquidity.
Also, look at the sales are showing NA. So I don't know.
That's nothing. 3 million in a week.
Are they selling anything?
Their daily 300,000.
No liquidity.
There's none.
Yeah. But see, I look on that week, when you click the weekly again, that's where you see, now you see WGS and try ETON. See how it looks. It's really a really small company. Look at the sales. The sales are just a few million, but the stock has gone from 3 to 18 in a short period of time.
What is going in biomedical?
Too dangerous.
Yeah, crazy stuff.
Yeah, this looks a little crazy.
So if you want to see a fun one, put in GDXU, miners times 3, and look at a daily. I think it's up probably like 70% year to date. And look at the whipsaw it did here in the last couple of weeks. It went from 60 to 40 to 60 overnight almost.
This isn't
At the beginning of the year, it was like $25 stock.
low was 25. Right
So-
around.
Says today it was up 41. Oh no, that's a weekly. In 1 week, it went up 41% in the most current week.
This is what?
I just looked on the chart. The forecast is gold is showing 50 days higher for tomorrow.
That's insane.
Gold now gold is showing $61.40 higher tomorrow, near an all-time high.
I'll show one other chart. Futures are very interesting right now. I like to use FinViz futures. So 15 minutes, I get to see.
Lloyd, can I ask, where are you looking to see the gold? I assume that's a spot price?
CNBC, I'm looking at the commodity screen.
Gotcha.
The commodity screen, it shows gold is up $62.32 in overnight trading.
Gotcha.
I've owned Nugget for quite a while now,
Come
but
on.
with these ETFs, you can sell options. The other day, I sold an option on my Nugget holdings, and I got $3 a share. I'll take it.
Yeah, what is gold doing? It's 2% up, 60 to 60 bucks up. And if you want to see everything in the whole world, I don't look at this very often. It gives me a bunch of red and greens everywhere in the world.
What's the name of this screen?
This is you go to FinViz.
Yeah.
Futures. And index
Oh,
these.
thank you. Okay, thank you.
Lloyd, were you talking about trading covered calls on?
I've got quite a few shares in Nugget. In February or March, I sold a call and I earned $1.50 and it expired worthless. And then a few weeks ago, I sold another call and I got $3 a share. The strike price is 65. And if Nugget keeps going up, I'm either going to have to roll it up or they're going to take my shares away from me because Nugget's on a run right now that I hadn't anticipated. So I have to decide. I'll either let them take my shares or I'll roll it to maybe a $70 strike.
Currency is doing some weird
I
stuff.
don't know if people know on levers ETFs like TQQ, you can sell calls and puts on those also. Or if you don't want to buy the stock, you can just buy a call option, but they're pretty expensive. If you think it's going to go up and you don't want to spend the money to, say, 1,000 shares in TQQ right now is like $44,000. If you buy 10 call contracts, it'd be a lot cheaper than $44,000. And so I don't know if people know you can do options, but it's a higher risk game. You have to choose the right duration and strike, or it can be costly, but another way to trade.
I have a question.
Yeah.
Would you consider doing deep in the money call option on TQQ with expiration a year out?
No, I wouldn't personally. A year's way too long. I have no idea where the world's going to be in a year.
Is anyone an expert in silver? I don't know. Or ask if there's any takes on silver. I just know technical, but I don't know how the world uses it.
So silver is roughly, it takes 100 ounces of silver to buy an ounce of gold. Silver is used much more in industrial production than gold is, but silver is easier to mine, or there's more silver in the ground to find. The ratio between gold and silver swings quite a bit. Right now it's about 100 to 1, but at times it's been as low as 50 to 1 or 40 to 1. There is a relationship between gold and silver, but it's a loose relationship. A lot of people that are afraid of currency, they buy silver thinking if the world ever went to hell, they could use it to buy food, gasoline, clothing or something. And so hopefully we don't ever get to that spot in the world, but it is used by collectors and stackers, and it's also used in industrial use because it's a good conductor of electricity. I'm not an expert in the metals at all, but I've been studying them quite a bit because I started buying gold about 16 months ago.
Usually gold goes up when there is a lot of instability, especially it has to do with currency and macro instability, which is why gold is going up. It has run quite a bit, so most likely it will go sideways or we'll see a pullback in gold. When gold pulls back, usually silver also pulls back, and silver has much wilder swings than gold. But the key thing to understand here is silver is considered poor man's gold. So when gold starts moving really in high gear, that's when you need to buy silver because then it can go 10x very quickly.
You can hardly see the gold line, but see gold in the past year, gold's up 35% and silver's only up 11. Now in 5 years, silver's done better, 97 versus 84.
Interesting. Because gold did consolidate for almost 4 years until it started rocketing up.
There's some rumors that foreign countries are accumulating gold to strengthen their reserves. I heard a funny story, and I think it's a true story, is people were really worried that maybe the tariffs were going to impact the cost of imported gold and silver. Quite a bit of gold and silver is imported to the U.S. I heard a story that Goldman Sachs was hiring people to fly to London, buy a suitcase full of gold, and bring it back to New York. The spread between London and New York was enough that it paid for the plane trip, the guy's wages, and they still made a profit on it. And so, but then when they heard that gold and silver was exempt from the tariffs, gold dropped like $100 or $200 an ounce the day that they were exempted, because the speculators realized that what they'd speculated on wasn't necessarily true. So if you look at a daily chart for gold, you'll see a pretty steep sell-off about 5 days ago. See that sell-off right there? That's when the speculators realized that the tariffs exempted silver and gold. But now why it's taken off, and now gold's hit a new all-time high in the last 3 or 4 days. It looks like it's really volatile.
So gold, if you have been hearing news, there's a lot of gold has moved from London's exchange to US. And it's not because of tariffs or anything. It is something to do with capital flows. Usually when there is war going on, or if countries are running too much debt, then at some point, countries are not going to pay back. Right now, Euro is in that situation. They want to go to war because they don't want to finish off their debt. And US is removing its support for Ukraine war. So they have to pony up. When that starts happening, a lot of these countries, Germany, France, UK, everybody will start putting capital controls. That means you cannot move gold, money, anything outside of the borders, which is why gold is being moved out of.
Good information, Yoggers. Thanks.
And also the reason gold is going up is because a lot of federal banks are buying gold, because there is a lot of dominance of US dollar, and the way currently US is acting, they're not sure tomorrow US can come back and say, hey, by the way, you guys have so much treasuries, they are all nullified. Sorry, we are not going to give you a damn thing. What are you going to do? Especially a country like China. They hold a lot of US treasuries.
So we have an event coming up that they're going to do an audit on Fort Knox.
That's not going to happen.
There's more gold at the Federal Reserve Bank in New York than in Fort.
It's interesting to see on this chart that not only is gold hit an all-time high today, it looks like it's going to be higher tomorrow. It's just amazing to me. I haven't owned gold very long. I was buying it at Costco. If you buy gold at Costco, you get a 4% rebate. A couple of times I went either online or into the store, and they were selling gold below the spot price because they'd priced it like 5 days before. You get a 4% rebate, 2% on your Costco card and 2% on your credit card. So you literally get a 4% discount. And so I started buying gold last January at about $2,000 an ounce, and now it's selling more than 50% higher. So you just wonder, do you hang on to it? Do you buy more? Do you sell? If you hold gold for a year or longer, there's a 15% tax on your gains. If you own it less than a year, you get the full tax burden as if it was salary, is what I understand.
Where do you sell the gold?
There are hundreds, if not thousands, of companies that will buy your gold.
Because I always thought it's like, I guess you can always ship it online too and insure it, and they'll buy it for best rate. Because I always think just pawn shops to sell gold.
I wouldn't sell gold to a pawn shop. That's probably not the best place, but there are gold dealers and refiners, and they'll pay about 98% of spot.
That's pretty good.
If you buy from Costco online, they'll ship it to you like overnight shipping, and the shipping is free, and it comes right to your house.
Don't they have a limit on how much you can buy?
You buy 5 ounces of gold.
5 ounces every day?
Yeah, 5 ounces. It's not offered every single day. If you go online, on some days they'll have gold and some days they won't. You might have to go online every day for 4 or 5 days in a row before you find it available. But if you see it available and you want it, you better order it fast. When they put it up online, it might be gone in 2 to 4 hours.
I would be worried about holding gold in my house.
Yeah, it's an issue of holding in your house. And one way to own gold is by the ETF. Very liquid, and it moves up in tandem with the price of gold.
What's my take on BTC? I brought up a BTC map. This is TradingView. I tend to look at it on here because it gives me just a spot price. And this is Bitstamp, so there's usually high enough liquidity. So pretty much our high was 110. We're going through a consolidation. I usually look at a multi-month model to see the overall trend. How are we doing on the trend lines? It's pretty good.
Yeah, it looks strong.
Yeah, it's pretty much usually follows a pretty much standard trend line. There's a halving that went on. I expect it to still go up in the next year or so. So I tend to hold longer and I use dollar cost averaging to buy, and then I sell later on.
So how are you buying an ETF, or you buying it where it's in an account, or how do you physically?
I buy the Bitcoin itself, and I
Yeah.
just look at Coinbase.
I heard that in some cases those services get hacked and their Bitcoins have been stolen.
Why don't you store it in a cold wallet?
Because I'm buying it every single month. As long as it's well protected, I'm confident. My friend who's really into crypto says Coinbase is good enough. Swan is probably better.
Yeah, but now you can also have like ETFs like IBIT, and there are other ETFs as well. So if you don't want to hold direct Bitcoin, you can just go with the ETF. It's a leverage play. So it's just like your leverage ETF, because MSTR directly doesn't correlate with, they do buy Bitcoin, but they're doing a lot of leverage financing.
Or about MSTX?
What is MSTX?
That's a leverage on MicroStrategy. But it's volatile on top of volatile.
So instead of MSTY is another one. It's income ETF on MS MicroStrategy.
Oh, really?
Yeah,
MSTY?
it pays monthly dividends.
I've been hacked on 2 different platforms. I lost a lot of Bitcoin, and I really should go to cold wallet.
In the chat window, we have an interesting comment from Satish, if that's how it's pronounced, about in purchasing power in India, and that they put their money in gold to hedge against loss of purchasing power. I think India has a few million people.
I think it's 1 billion now in India. Like
Yeah,
China,
Billion.
they're number 1 now. Wow.
2 years ago, they passed China.
Go India.
Because China said you could only have one baby.
And they took that off and no one's having babies anymore. Satish says 1.5 billion in India.
It's been a really interesting discussion here, but I'm not sure on the Bitcoin thing if there is a technical analysis, and then if you want it, what do you do with it? Is an ETF the right way to do it? Do you do a physical thing? I'm a newbie, beginner, don't know anything about it kind of guy.
So if you are new to crypto, just go with the ETF like IBIT. There are many ETFs now, so you can
Yeah.
go with that.
Yeah.
Nobody knows the real value of Bitcoin. The real test of Bitcoin will happen when we have a real recession. That is when we will know whether Bitcoin can hold any value, like gold. As of now, Bitcoin remains a risky asset. As soon as market goes down, Bitcoin follows, or Bitcoin goes down, market follows. They call it digital gold, but we are not there yet, and it will take some time to get that level of confidence in the new currency.
So Yogesh, did you say IBIT?
Yes.
Okay.
So this is iShares. There is a Fidelity as well, I believe. They all started last year or a year before that. So like you won't have a whole lot of history, but they track Bitcoin. Just QQQ tracks NASDAQ. So same thing. If you really want to play crypto, you can use.
I might just do a beginner trade and buy it. It seems like if I own something, I tend to pay attention to it more than if I don't own it.
Hey, Alex, which yield max ETF are you referring to?
STY?
And then look at all those dividends or distributions. Is that like one every quarter?
I think that's on.
So MSTY is the yield max ETF that pays monthly dividend. I have a position in BITO and a small position in MSTY. The interesting part of playing this is if you can time them, or even if you don't want to time them, if you just buy the ETF and then you buy put option, like say 4 or 5 months out.
Yeah.
It only goes up till October for now. Then you can see it pays off pretty well. The dividend will be like $1 or more per month.
Look at the far left of the chart. It says yield is 271%. What does that mean?
You double your money every year from the dividends.
Well, if it works that way, then sure, but it doesn't.
So put up a daily chart so I can see what the value of the dividend is. It will tell at the bottom.
The stock goes down as the dividend, so it nets out, it cancels out.
Okay.
All of these like Tesla yield, all the yield max stuff is the same.
Okay.
Thank you, John.
If Bitcoin goes up, would this one also go up then like it did?
Yes.
Up from September to November and went from 20 to 46.
Yes. When MSTR goes up, this one also goes up.
Oh man, my head's spinning right now.
I like how we all look at a little bit of different stuff. Yeah.
So the way I play this is buy 100 shares at a low risk entry. Then at some later point, buy a put option to cover my cost basis. If it goes up, I make money, plus I make money through dividends.
Wait a minute, you said you buy a put option?
Correct. But I'm buying it at a later date when MSTY goes up.
But is your goal that your put option expires worthless?
If it expires worthless, that's great because I will make more money. If at the time when my put option expires, if MSTY is down, then I would not mind to let go my stock because my capital is preserved. Plus I'm making more money in dividends. Plus I'm also making some profit because my put option strike is above my cost basis.
Wow. Okay. You got my head spinning there. I don't know what to say.
You would not lose your stock if you buy a put option. It just stops the bleeding beyond that strike. You only lose it if you sell a call option, like a cover call, then you give the stock away.
No, so if I have a put option and at the point of time when my put expires, if the put option is in the money, then I lose the stock.
No, you don't, because you own it. You get paid when you close the put.
It doesn't
Yeah,
matter
yeah.
because the whole idea is to preserve my capital.
So it stops the bleeding. What you're thinking about when you lose the stock is when you sell a call, when it's in the money at expiration, then it takes your stock away in exchange. But buying a put option will
So
not.
I have a right to stock at that price.
Yeah, you can choose to do, but it's not a must.
Got it.
Man, this is a fantastic discussion, guys. I appreciate people muting and sharing some really interesting things. And also, Hailey, that was a well thought out presentation. I know you put a lot of time into that, and we may have a follow through day
Tomorrow.
or Monday or Tuesday. Nobody knows. And sometimes when you least expect it and you're the most pessimistic is when it happens.
That's always the case.
And I remember back, we had a follow through day like in March of 2017, 2018. Sometime we had a follow through day that everybody was poo-pooing and say it was ridiculous. And the market just took off like a bandit after we had that follow through day. The people that followed Bill's system did really well. I used to remember the year. It was either 2017 or 2018 that the thing just took off. Look at March of 16, where the NASDAQ was at 4209, and look where it was a year later.
If it's March of 16, this rips.
Yeah, and then look,
Year.
it goes from 42 to 8100 and then all the way to 10,000.
Yep.
But notice when we had that follow through day with 4209, look how it'd come all the way down from 5176. And people were really pessimistic about the market and all the stuff that was going on. And a lot of people didn't believe the follow through day. But Bill says when we have one, you have to buy something.
You have to buy. Let me turn off my screen share.
Yeah. That was a good presentation, Hailey, and a good reminder of how you measure a follow day. It's up 1.2%, and the volume has to be higher than the previous day. It has to be day 4 or later.
Yes.
And so that's a good reminder of things we need to be looking for tomorrow or Monday or whenever. And it's always good to have those kind of refreshers. I was just going to take a look. I don't know if I can tell by looking at the pre-market.
Pre-market hurts a little bit right now.
Yeah, the pre-markets are pretty negative right now. I read a headline somewhere that it said, oh, in IBD, about 3 hours ago, it said the futures were pointing to a higher tomorrow. So maybe that's reversed.
I watched futures and they vacillate so much in just an hour or two.
I think when I checked right before the meeting, it was like -1, and now it's like -0.5. I always remember Trump's first election. Futures are so negative. Then when I woke up in the morning, nothing happened overnight.
I think there's a negative that we had a pretty good CPI report today, but we still went down quite a bit. That seems negative to me.
That was pretty negative.
Yeah. Even though it's frustrating, and you may not agree with me, from a market trader and chart reader, it's actually exciting times. We're seeing a lot of changes in the market with volatility. There are two things going on almost simultaneously, frustration and opportunity. My main advice is have back-tested, proven buy and sell rules, and think more about your rules than maybe what your brain and heart is telling you to do. If the rules say we're below the 200 day, we haven't had a follow through day, if that's occurring, why do you want to buy something? It might be an example of a question. And I promise you, I've been trading. I bought my first, I told most of you heard this, I bought my first stock, I think it was in 1961. So think about how many years ago that was. From my experiences, we'll see a much higher market not many months from now. It can be frustrating right now, but with the free enterprise system, innovative products, medical discoveries, and AI coming online, the possibility of a higher market is real. And if you keep your powder dry, and then when we get a good signal that it's time to buy, you jump on it, you ride it up to a certain point, and then you're ready to go back to cash. That's the formula for success, guys.
I
So
do believe.
thanks, everybody. And thanks, Hailey. I think May 8th is the next meetup, and Hailey has to make an important decision. Traditionally, for the 16 years I've been doing this, we've never done June, July, and August. And last year, we had a member step up to the plate, and he actually did meetups for the first time ever on June, July, and August. So Hailey has a decision to make, and he doesn't have to tell us right now, but it's going to be up to him to decide if he wants to take summer off or if he wants to keep doing the meetups. And we'll let you know maybe a little bit later what he's decided to do there.
Maybe we'll just do a poll question on the next meetup
That might be
to
a
see.
whole question.
I think that'll be a good poll question if people want the summer meetups.
The reason we start at 5 o'clock is because we were picking up more lower 48 members. Starting at 7 p.m. Alaska time just wasn't working for people. We got the feedback, listened up, and we moved them. I think the response from making that change was favorable.
Yep.
So thanks, everyone. I've got the recording going right now. As soon as I log off, it will start downloading to my hard drive. Once it's downloaded, I'll put it over to Google Drive and send the link out. Hailey, is okay if I share your PowerPoint too?
Yep.
Okay, the full meeting recording and Hailey's slides will go out probably no earlier than Friday afternoon and no later than sometime Saturday. Thanks, everybody. Let's keep looking forward to new opportunities in the market. I really appreciate those of you that jumped in, unmuted yourself, and shared or put comments over on the chat side. That, to me, that made it a much more dynamic and interesting meetup. I'm grateful to everyone that did that. Thank you.
Yes.
Good night, then.
Good night, everyone.
Thanks, you guys.